In this video, I will be talking about how to catch up missed depreciation on residential rental property. This video contains two parts. This is part 1. It's about how to file Form 3115 for missed depreciation. The video was originally made in Chinese, so if you are more interested in that version, take a look at the show notes. I have the link posted there. First of all, I'm not a tax professional. I'm not a CPA. So all the information I'm providing in my video, it's not professional tax advice. Please use it at your own risk. If you have a rental property, probably you are familiar with Schedule E of Form 1040. Schedule E has all the income and expenses of your rental property put in there. And if you go to the expense part, you will see at number 18 there is an item which is called depreciation. So why did I miss this part every year in the past few years? Basically, I have a misunderstanding of what depreciation means here. I thought it's about the fair market value of my rental property, but actually it's not. It basically means if you are renting your house to other people, the house is put into service, and that's why it is depreciated. So if your house is being rented every year, you should have a depreciation every year. But what number should we put here? It's not a number that we just make up. We need to calculate that. So let's first take a look at how do we calculate the house depreciation if we are renting it to other people. To calculate how your residential rental property is going to be depreciated every year, we need to use a different form from IRS. It's this form, 4562. In 4562, we will have Part 3 and Section B here. So suppose we have a new house we purchased for rental property in 2020, and we are doing the depreciation correctly in this year. So what do we do with this form? Basically, we will just go to line H here. Line H is about how do we do the depreciation for residential rental property. There are a few information which is already filled out here. So first, the recovery period for residential rental property is going to be 27.5 years. The convention is going to be a mid-month convention. I'll talk about it in detail in the next slide. And the method is going to be a straight line method. Basically, that means your house will be depreciated linearly with time. So in the next page, we will take a close look at how do we calculate the number for depreciation. Suppose the purchase price for the rental property is equal to this number. However, the land cannot be depreciated, so we need to subtract the land value from the purchase price. But how do we find out how much the land is valued? You can take a look at your property tax bill. In that bill, the house value is divided into two parts, and you just calculate the ratio of the land. And then you use that ratio to calculate how much money you should subtract from the purchase price. So suppose my land only accounts for about 30% of the house price, then I just use the purchase price minus about 30% of this purchase price, and that's going to be the value of the improvements of the house, and that value can be depreciated. In the meantime, if you are making this purchase, you must have paid a few extra dollars on your title. Maybe you pay a few extra dollars to the county, and you can add it back here. And with these three numbers, you end up getting this number, and this is going to be the cost basis for your rental property. Once we have the cost basis, things will be much easier. Remember, IRS said that residential rental property has a recovery period of 27.5 years. That's equal to 330 months. And you just divided the cost basis with 330 months. You will get this value. This is going to be how much depreciation you are getting every month on your residential rental property. And for tax return, probably this value will be more meaningful. You just multiply the monthly value with 12 you get for a full year. If you renting your property out, you're going to have a depreciation equal to this number. And there is another scenario. So suppose this year in 2020, I bought the house, but I didn't rent it out like at the beginning of January. I just started renting from August. So how do I calculate the depreciation? So no matter on which day you're starting to, in August, you're starting to rent your house out, August is going to be counted as half a month. This is what we call a mid-month convention. And then September, October, November, December, that's another 4 months. This adds up to 4.5 months for this year. And your depreciation in this year is going to be the monthly value multiplied by 4.5 months. And this is going to be the final number. Now getting back to Form 4562 and getting back to line H. First, we fill in when did we rent this house out in this year. It's put into service on August 2020. And the basis for depreciation is equal to this number. And according to the rules of IRS, we have calculated this year's depreciation is equal to this number. And then in next year's tax return, things will be much easier because this year we already know the cost basis of our rental property. So all we need to do is to go to line 17 and we put the yearly depreciation here. Suppose our house is rented out for a whole year. So that's what we should do if we depreciate our rental property according to IRS rules. But suppose you're like me, you just messed up for the first few years. So how should we make it up? So to catch up all the missed depreciation, we need to use a different form from IRS. It's Form 3115. This form has a name of application for changing accounting method, which means it can have a lot of different purposes. And for our special case, basically, we are trying to change the accounting method on our residential rental property from no depreciation to yearly depreciation. And for that purpose, we need to fill out Part 1, 2, 4, and Schedule E of this form. What's tricky about this form is that it's not just yes-no questions or simple calculations from line to line. We actually need to provide a few attachments to address the questions raised in this form. So that's why this form may need a little bit more extra efforts to file it with IRS. I will just skip the personal information part, and then we come to this part. This part contains two different questions. The first one, we need to indicate what kind of applicant we are. So I'm just an individual applicant. And then what kind of request this is about. We are requesting about depreciation, so check this box here. Now, part 1 of this form. Information for automatic change request. And the most important question in this part is going to be question number 1, because IRS assigned a different number for each type of request on the accounting method change. And for our missed depreciation on residential rental property, what number we should put in here? It should be number 7. And then for question 2 and 3, you just check it according to your own situation, and that should be fine. Now we have come to the second part of this form. It's actually a very long part, but fortunately it contains mostly yes-no questions, so you just check the yes-no box according to your own situation, and that should be fine. However, there are a few tricky questions which needs a little bit more work in part 2. The first one is 7A and B. So 7A, it asks for that the audit protection apply to the requested change, and we should check yes here. And then in 7B, it asks if yes, we need to check the applicable box. And for my simple case, my reason is my request is not under examination. And for that, I need to put in a statement here. I call it attachment 1. And I also tell IRS what this attachment is about. It's about line 7B in part 2. And I'm putting a statement out here. The taxpayer is making a change under DCN number 7, and it's not under examination. So audit protection should apply. The next tricky question is going to be question number 14. It has 4 small questions here. So I'm adding another attachment to my form, and it addresses the 4 questions one by one. The first one is asking for the item being changed, and I'm telling IRS the item is going to be the unclaimed depreciation of this number on residential rental property. And how did I get this number? You will see it in a moment. And the second question, what's the present method of accounting? No depreciation, and it happened in the past few years. And the third question, what's the method I'm proposing here? I'm going to depreciate my rental property under this section and using the mid-month convention straight line method over 27.5 years. And the last question, present overall accounting method. If you do not have any complicated cases, it's going to be cash. Another question that needs special attention is question number 15. Attach a detailed and complete description of the applicant's trade or business. So our trade or business is actually the rental property. So you just add another attachment 3 here. And in this attachment, you just answer the question directly. So my only business activity is residential rental real estate, and the property was placed in service in August 2015, and that's it. Now we've come to part 4 of this form. For the yes/no questions in this part, just answer it according to your own situation. And what we need to look at is question 26. So in question 26, we are telling IRS how much depreciation we are trying to make up with this application. And what we need here is another attachment. This attachment is gonna outline how do we calculate the missed depreciation. So we have the cost basis here equal to this number. And in the past a few years, each year I have this number of depreciation. So we add it up, and in sum, we have the total missed depreciation, which is equal to 54211. And you just fill in this number here. What we need to pay attention is that we need to put a negative sign here for this case, because our missed depreciation has an effect of decrease our yearly income, so there is a negative sign here. And finally, we have come to the last part of this form. It's going to be Schedule E. And for the yes/no questions, again, answer it according to your own situation. And we need another attachment for the question number 7. Again, it contains a couple of different questions here. So for 7A, code section under which the property will be depreciated, section 168 and regulations. What's our asset class? Residential rental property. Facts. We have already attached supporting facts with our statements. Depreciation method, section 168, straight line. Useful life, 27.5 years. Convention, mid-months. First year special depreciation, usually you don't have that. So no, property doesn't qualify. And the last question, account. If it's a simple case, it's going to be single asset account. And that will be all about Form 3115. Now I'm getting back at Schedule E of my Form 1040. So first of all, on line 18, I need to put in the yearly depreciation on my rental property. It should be equal to 12391. And then I need to mention this year I have catch-up depreciation. It's calculated from Form 3115, and the number is equal to 54211. And at this point, probably you have noticed, suppose you have missed quite a few years depreciation on this rental property. The number you are getting here is going to be very big. Probably it's exceeding the income you are having at this rental property. So you are basically having a loss on your rental property. So is this loss fully tax deductible? If the number is very big here, probably the answer is no. Basically, it's because rental activity is categorized by IRS as passive activity. So the loss from a passive activity can only be used to offset your income from a passive activity. Remember, the salary that you are making from your employer is an active income. It cannot be offset by your rental loss here. So if the number is really large, probably you will not be able to use it up in this year's tax return. So what happens to the rest of it? So how do you use it up? I will talk about it in my next video.